How we doing, everyone? Today is Saturday, July the 22nd, 2023. Just coming to you with our real estate note investing training. We're live here on YouTube as well as Instagram. If you don't catch this live, you can go to the YouTube channel, Abundant Capital Group, and catch all of the replays there. You'll see the first, this is the fourth training, so you'll see the other three plus this one if you don't have a chance to join in right now. But we're doing this because we just feel like this time is a good time to look into real estate note investing with everything that's going on in the market, the tightening of credit, the lack of lending, certain issues with commercial properties, things that may happen with people in the residential space coming up. So we just think it's a good time to potentially, look into real estate notes, invest in real estate notes, whether you have a 401k, some type of retirement plan, something like that. So you can look into this as an opportunity if you're looking to get into real estate, don't have a lot of money. We're kind of going from A to Z, and you might find a place where you can fit in, just depending on how much money that you have. A lot of times with notes, you can get involved with note investing for a lot less price. There's different ways to kind of get involved. So with that being said, we're going to start this week's training. This week's training is focused on inventory sources and proper due diligence. Again, we're usually not here too long, maybe about 20 to 30 minutes. We're just trying to break this down piece by piece, little by little, give everybody a little bit of information. And then by the end, hopefully you'll have a good grasp of real estate note investing and real estate notes. So, before we've talked about in those other trainings that I mentioned, we talked about why you want to invest in notes, and we talked about what is a note and the different types of notes that you want to invest in. And also, what is your approach? Like, what are you looking to do? You need to know like how you want to approach this. Somebody with a retirement account is going to approach it different than someone who may be an investor and has a portfolio of properties and hasn't been investing for a while. So everyone knows where they are in the process and what they're trying to accomplish. You have to try to figure that out, and then there's a place within the within notes that that you could fit. So let me try to close this down a little bit so the glare don't come in too much. Just try to turn it a little bit. Get rid of some of that glare. Okay, I think that's better. All right, so like I said, we're going to talk about first inventory sources. Where do you find inventory of notes? You can find them from note investment companies. Also, we mentioned this in one of the earlier trainings as well, how notes become available to investors like myself and yourself, maybe at this smaller level. There's it kind of trickles down to us. So we did talk about that. And one of the things that we discussed is that note investment companies, they usually buy, smaller packages of notes, maybe 100, they may buy 50 to 100, 150, something like that. They buy a certain amount. And out of the certain amount that they buy, there's some that they keep for themselves. And then there's others that they just offer to investors such as yourself or myself on a lower scale, where they can buy individually as opposed to buying larger pools. I mean, the note investment company will offer 5, 6, 10 notes at a time depending on who they are, but they also allow individuals to buy them one at a time, what they call one-offs. So you have note investment companies. Now, if you are thinking about getting into notes and saw the other trainings and this has piqued your interest and you want to know some of those companies, you can reach out to me and we'll kind of talk through that and get you that information. But for now, this is part of the training, I'm just going to go over kind of overview of things right now. So you have these note investment companies, like I said, that purchase notes in bulk, and will, even if they do, let's say they keep all of their portfolio, at some point, they're going to want to sell those because they're trying to recapitalize to go and buy, some of those other pools. So they may keep it in their portfolio for a year, 2 years, whatever the case may be. And at some point they want to sell. So these note investment companies are always at some point looking to sell some of their inventory. So it's just a matter of, you being on their list or finding out who they are and reaching out to them and seeing what they have to offer, and making a bid and see if you can purchase it. So the next one is the direct mail. When I mentioned earlier about some people that may not have 25, 30, 40, 50, $100,000 to invest, you can get involved by doing a direct mail campaign. A lot of times you can do that for somewhere between $1,000 to $2,000. And what that means is that you'll start to send out a series of mailers to individuals who have created seller financing or notes on a property. And what you want to do, the reason why it's probably between 1,000 and 2,000 is because each month you want to send out the mailer until you get a certain response. You probably won't get a hefty response on your first mailing. It may come on the 5th or 6th. But if you can designate a certain amount of dollars over, let's say, a 6-month to 12-month period to consistently send out mailers, the potential is after that 6 to 12 months, you'll find at least one deal that will more than pay you back for that initial $1,000 or $2,000 investment that you made. And you'll get all that back, and then you can have more money to, maybe do another campaign. But direct mail goes out to more of what they call the mom and pop, probably the smaller type investor that maybe has created one or two notes in their lifetime, and is ready to sell. Depending on what the situation is, whatever's going on with it, they may want to sell. But it's more of an individual as opposed to a larger company that you are focusing on. So you can do that as well, and you can buy these lists. There are a couple of different websites that specialize in getting the data, getting the addresses, the information of the people that have created seller finance in the past and who have created new ones, right now. So they keep that data up to date, and they can send you those lists, and then you pay for the list. So that's one cost. And then it's just a matter of how many do you want to send out? Do you want to focus on like 500 people? Do you want to focus on 200 people? Do you want to focus on 1,000 people? And then whatever it costs to send out that mail, per month, those are kind of the expenses that, that you're incurring initially with the idea of getting in touch with someone and working out a deal with them. Now, you may be someone, obviously, if you're new to this, you may not have the training, but you have that particular capital. We can partner together, and you can supply the funds to do the marketing. And then once people start to call in and reach out based on the mailing, then we can take over, kind of talk to them, see what the situation is, be in communication with you, and kind of orchestrate the deal, and keep you abreast on what the deal is on and what type of money that we could make on it. And then obviously you would get fully reimbursed for your the money that you initially put out, plus an additional. And then whatever we could get out of the deal, we'd be happy with that as well. So we'll work out something on an individual basis, but initially, you would be coming in with the money to do the campaign. So that's one way to get involved in real estate note investing. And in real estate, and you may not have, like I said earlier, certain amount of funds to just go ahead and purchase a note and do something like that. But this is a way to kind of get started. And then it may take, like I said, it could happen after the first month. It could happen after the second month. It may happen in month 9. But if you give it a certain amount of time to, just to make sure that you're, following up and sending out, because things with no holders today, they may not be in a position to sell, but who knows? In this market, in this just economy right now, things change over quickly. Circumstances may change in 6 months, in 3 months, and they may be thinking differently at that time and say, hey, you know, I can, sell this note that I have to get the money to do what it is that I need to do, whatever the case may be, whatever the reason that they may be selling at that particular time. But things change, so if you send out something today, they may not be interested, but over time, that could change. So that consistent follow up and everything like that, is a good way to get involved. Another way of getting inventory is you have online trading platforms. Now, this is where, quote unquote, some of the mom and pop or smaller note investors that may have 4, 5, 10 notes, they may put some of their inventory or some of the notes that they've created on these online trading platforms and say, hey, I'm interested in selling. And there are a few out there. Again, if you want that specific information, you can always reach out and we can get that to you. But they have platforms where they're saying, hey, I'm willing to sell this for, X amount of dollars is what I'm asking for it. And then it's just up to you to do the due diligence and, figure out if what they're asking is a good price, does it make sense, etc. So that's pretty much where the inventories come from, those three places. So if you are interested in getting involved, we can get more specifics on those three different ways of getting notes and getting no inventory to look at and possibly purchase. You can just reach out to us and we can do that. So the second part of this today is the proper due diligence. Now, as we talked about in previous training, you have performing, kind of sub-performing or reperforming notes, and then you have non-performing. So the due diligence for each of those categories is going to be very similar. There may be some small changes, and here and there on those three different or four different asset classes, but primarily, a lot of the same information that you're looking for, part of the due diligence, is going to be the same. So, we'll just talk about overall what's the things that we're looking, what we look at, and then next week we'll go a little bit deeper into each asset class and talk about them individually based on these 7 or 8 different things that we look at when we're evaluating a deal. And then, like I said, in some asset classes, you may not look at, one or two things, or you may look at it a little bit differently. But, these are the things that we look at when we're trying to make these decisions. So the first thing is the property value. That's probably, in my opinion, the most important thing. You have to establish the value of the property in as is condition right now, not what it could be in 6 months, not what it could be in a year, not what it could be in ARV, after repair value, none of that. What is the property worth today? And if you can get yourself a good handle on that, that's a great start. Now, there are a lot of online places that you can go to. There are some free places that most people know, like Zillow, Realtor.com, Redfin, and different places like that. I think Trulia and Zillow may have merged or something like that, so it's like the same information. But there are a few different online free platforms where you can go on and get in a lot of cases, you can get a good idea of what the property cost. Obviously, if you want to get a more concrete value, you may have to spend some money to get what's called a broker's price opinion, what we call, and the acronym is BPO. When you send someone from that area to go ride by the house, look at local data, local information, local sales data, and they've come up with a report. Now that can cost you anywhere between like 100 to maybe $150 for a BPO, and maybe even less. You may be down by $75, just depending on the area that you're looking at and what is being charged. But this is more of a professional opinion about what the value of the property is. Now, you can't get into the property to see the interior, but we have a pretty good idea based on the exterior of the property and this information that's given to us what the value is, what a good range is. We just don't want to, we just don't want to be, if we think it's 100,000 and it's really worth 90,000, that's not a big deal when it comes to note investing. But if you thought it was 100,000 and it was only worth 75 or 70,000 or less, then that becomes more of an issue. It's you're off by too much, and it could really mess up what you would offer, and how much that you would make back in yield and all this other stuff. So getting that value is very important. So if you can use some of the online tools to get a good idea, if some of those websites that you go online, if they're saying about the similar amount, a lot of times that's accurate, or it's in the ballpark. Like I said, maybe you can adjust the numbers up or down. In this case, probably you want to be on the safe side and maybe go down a little bit. You could do that. But if one site says 100,000, another one says 150, another one says 180, now we have a big difference. So we then may want to get more of that broker's price opinion, and then you can factor, that cost into what it is that you're going to offer. If you are going to, expend that money to do that. And if you don't do that, there's some other sources. I think one is Batch Leads. You have Propelio. And you have another site. The name is escaping me right now. That you can go on to. These are paid subscriptions, like monthly subscriptions, where you pay like $75, maybe somewhere between $75 to $100 per month, and you have access to go online, put the address in, and it pulls all that data for you. So you could, do that as well as part of this if you wanted to, if you're really thinking about doing it and want to expend that, you can sign up for some of those things, and then you can put the information in, and you can see what that's saying, because that's taking, local information, local sales data, and it's providing you, what it feels the property is worth. But understanding the value is very, very important. We don't want to be extremely off. If we are, then we could make a bad investment. So the next thing is the numbers, the relationship of the numbers. What are you paying for it? What is your investment to value ratio? What is my return on investment? Like, what are all those numbers saying? And what am I, paying for this asset in regards to what it's worth? What's that percentage? So you want to see all of these numbers and the relationship that they have to one another when you're making a decision. So that's very, very important. And then once you have these numbers, certain things are going to pop off, pop to you and say, oh, this looks like, a deal that, I really should, look further into. A lot of this stuff is sent out on spreadsheets when you are looking at inventory. And so you can, kind of, set up columns to look at numbers to say, something has a really low investment to value ratio, has this particular property has good equity in it. This other property, doesn't have any equity or negative equity. So maybe I want to stay away from it. So you want to, bring all these numbers together and look at the relationship of them based on what it is that, you're trying to accomplish. And certain assets are going to stick out to you as opposed to others. So then, you want to look at the property title. At some point, when you move down the path of purchasing, you want to get a title report. A lot of times these assets, one was run within like the last 12 months, 6 months, maybe, 2 years, something like that. So there's been one that has been run relatively recently, and maybe you just have to refresh that. You can go back to that company and say, hey, 2 years ago, you ran this title. Can you just refresh it? maybe you can save some money there in terms of getting a refresh title from the same company. Make is going to cost you less than running a whole new title report with another company. So this again is kind of the steps, and then once you get to the point that you want to move forward, something that's caught in your eye, something fits what it is that you're looking for, and you have made an offer, and then now it's time to pull that report or refresh that report and just make sure that nothing has popped up uh, since the time that you've seen this asset, and since the person that's selling it to you has owned it till now. We don't want to see anything new pop up there, or if something that does pop up there, what is it? How does that change our numbers? Do we need to be concerned about it? So getting a property title report is very important. Property taxes. A lot of times in different areas, you can go right online. There is a online site that covers pretty much every state. And if the information is available online, this site will have it. It's netreoonline.com, I believe it is netreo on. Let me double check that. Yeah, netronline.com. So that's the website that you go to. You punch in the zip code, or if you know the name of the county, you put that in, and then it'll bring you to that local area's public information. And you want to go to the taxes and see if it's been paid. The reason being is that taxes supersede any type of lien, or let me see, delinquent taxes supersede any other lien. So if you purchasing a first position lien, a first position note on a property, but the person hasn't paid their taxes, that lien could jump yours, and then the person that buys that lien could foreclose on the property and wipe you out as the investor. So it's very important that we understand if the taxes have been paid, if they haven't been paid, how much are they, when are they due, when is this set to go to a tax sale. Sometimes you can pay a certain amount just to get it out of a delinquent status and not be sold. Sometimes you have to pay the whole thing. But again, you want to factor that into your numbers as part of your due diligence. You can say, well, this person owes $3,000 in taxes, and I need to factor that in because I'm going to need to pay that. I mean, you'll get it back, so to speak, whether it's a discount off of your purchase, or yeah, it's a discount off your purchase. So it's not like you're losing the money. It is going towards like the purchase. Um, so you just want to factor that in. Say, hey, I got to pay these taxes, so I need instead of paying $25,000 for this, I need to pay $22,000 for this note, because I'm going to have to take care of that. So taxes are very, very important. I would say that's right up there with the property value. Just making sure that they're paid, and if they're not paid, when is this property in danger of going to a tax sale? Proper documentation. That's when we look at the note. We look at the security agreement. And again, these are things that we talked about in previous training, so you can always go back. But a note goes along with a security agreement. The note is the IOU. The security agreement is telling you what you can do in case of default. So it spells out everything in that security agreement. So we want to look at that information. A lot of times, as you go through this and see them, you'll see the same information a lot of times, but just want to make sure you understand what it is that you're purchasing. Once you know that if there's any clauses or things that kick in default or whatever the case may be, you just want to understand that, and that's part of this due diligence process. And then lastly, it's planning your exit strategy. We want to have at least 3 to 4 different exit strategies when you're buying a note. Because let's just say, we purchase, we think it's one thing, we thought something, come to find out after we purchase it, that's not the case. We want to be prepared to pivot to other exit strategies in that case. We buy it, it's performing right now. 2 months later, it becomes non-performing. We want to be prepared with exit strategies at that particular time if those things happen. So when they do happen, we're not thrown off. We're not, totally in shock and don't know what to do. And now, we're afraid of losing money and things like that. No, we look at 3 to 4 different exit strategies on a note. There's a lot of different things that you can do with a note. Now that's something that we'll talk about later down the line, but we want to make sure that, based on these exit strategies, that we are going to make sure that we do not lose any money. We at worst we break even or we make a small profit on any of these 3 or 4 different exit strategies, depending on what's going on with that note. So that's this week's training. Those that do proper due diligence and where to find inventory. We're gonna, like I said, next week 12:30 Eastern Standard Time here on Instagram Live, as well as Abundant Capital Group on YouTube. We'll be going into the different types of notes and going through each of these due diligence steps, and we'll go into a little bit more depth about that next week's training. So, join us here next week, 12:30 Eastern Standard Time, and that is what we'll be discussing and continuing the note training. If you have any questions, you can always post them to this to this post. This will be posted on social media, and it'll be in the archives on the Abundant Capital Group YouTube channel, as well as on Instagram. It'll be there as well. Post any questions that you might have, things that you want answered, and we'll get those answered as well. You can catch us Monday through Friday at 12:30 Eastern. If you have some time during the week, if you're taking lunch or something like that, or if you work a job where you go in later and you have time during the day, you can reach out to us. You can look for us on Instagram Live at Abundant Capital Group and ask your questions. If you have some concerns, thinking about things, you've done some research and have some questions on it, please look for us there. We talk about real estate notes. We talk about just the overall market and different real estate related topics at that time. We're usually on there from about 12:30 to 1, sometimes shorter, just depending on how many questions that we get. So join us there as well. Okay. And if you want to reach out to me, my telephone number is 973-475-8488. You can always email me too at investorgmr@yahoo.com. With that, everybody have a great rest of your weekend, and we'll see you back on Monday.